If you've ever wondered what I think about certain stock picks, this is the video for you. If you've ever watched my Investing for Financial Freedom series, I go through a method that I use to make stock picks. And at the end of that video, there is this worksheet where you can use the whole system on these stock picks. I think I added one or two in here since then, Palantir, maybe SoFi, and HIMS. But generally speaking, this is the list that was in that document that you could run the system through. So I'm going to give you like a quick breakdown of the system once again. So in order for me to be interested in a stock, to options trade or to invest in, the stocks charts have to be rising on the 5-year, 1-year, and 3-month chart. Okay. The financial statements have to be good. So the earnings have to be up for 4 years in a row, and the revenue also has to be up for 4 years in a row. So profits up 4 years and revenue up 4 years in a row. And you can see that really easily on Yahoo Finance by clicking in the ticker in the search bar, and then just clicking on the financials tab on the left, and it'll just bring up all that information for you. And all you want to see is rising numbers. If it clears that pathway, I want to make sure that the company is an industry dominator or a monopoly, okay? So that helps me as well. Also, more established companies is another win. Dividends are a plus. And that's basically the whole system. If it doesn't cross the threshold of having great charts and having those earnings and revenue going up, I don't even go there. I don't go any further, okay? If it does, then I start to look at the other things like dividend and industry domination and monopolies, okay? And then I make decisions from there. Because I'm not into trading tons and tons and tons of stocks. That's not where I get my success from. I get my success from narrowing my choices down. That actually just helps me trade more efficiently and more effectively. So let's go into where some of these stocks are today. They are at different places than they were a year ago. So that's also very interesting. Brands, they fall in and out of favor for various reasons, and we can go into some of why that is in this video, which is, to me, it's fascinating. But, okay, so winners. Right now, on the market, we have just experienced a pullback. And you know what? I love this timing to make this video because it really shows you what the true winners are for the economy that we are in right now, okay, and the market that we are in right now. So it is March 18th, 2025. And we have had this 10% pullback in the market. It was officially 10%, I think, 2 days ago. And so now we're just kind of bouncing around with that 10% down. And these are the stocks that still have excellent charts, okay? The 3-month might be down a little bit. I'm not going to, freak out about that, but what I will say is that if I am buying into a new position or I'm opening up new positions, I am for sure making sure that the stock that I would go into more heavily right now would have a rising 3-year chart, so 3-month chart. So there aren't many across the whole market. Like, you guys can actually comment in the comments and tell me if you found any more. I've been following these for a long time, so it's easy for me to sort of add new ones in and then take the other ones that aren't doing so well and move them around to different spots. So these are the winners. I can tell you right now, all of these have rising financials. Okay, so their finances are up year over year for 4 years, and that's exactly why they're winners. That's exactly why their charts are staying intact. I need you to understand that. Okay, we need to understand that. This is a part of why this is so important, is because you can't get on this list as if your earnings and revenue aren't up. That's not me saying that. That's the institutions telling you that, okay? So the institutions are doing their homework and they're going we're only going to be buying the stocks in a market sell-off that have these sorts of finances behind them. That's what they're saying to you. That's why the stock prices are up. So this isn't like Erica made this rule and so this is what made it to her winners list. No, they pushed it in here because these companies have had solid earnings and revenue. Okay, so the first one is CVX, that's Chevron, oil company, obviously, right? Gas company. Second one, Morgan Stanley, financial. Apple, we all know it. Okay, clear monopoly over many things in our lives, as far as computers, and then also like cloud, and just they give you a whole environment to live in. Like your computer is also, I'm sorry, your TV may also be set up to Apple TV, and you're watching their content potentially as even entertainment evening. Google. This one can be a little bit down right now, but I never count this one out. It's just again just so integrated into our lives. Costco is just a behemoth. It's been like amazing on a tear for like 5 years. J&J. I mean, I don't particularly love trading the pharmaceutical type stocks, but it is a clear winner. The reason I don't love the pharmaceutical stocks is they can be up for like 3-4 months at a time, and then down 4 months at a time, which make it more difficult to trade options with, in my opinion. However, as a long-term investment, I mean, the numbers are there. Walmart is just looking really, really good in this last year. Amazon, I mean, where isn't Amazon? Please tell me some way I could get Amazon out of my life. I think that's impossible. So I love this as a company. Visa, amazing. I think we're actually missing on here. Oh no, MasterCard, MasterCard, that is on there. These are solid winners. WM, that's waste management. That is the people that pick up trash and recycling at many corporate locations just all across the country. Sure do have a monopoly. It sounds like a weird stock to own. It's got a nice little dividend, and it just doesn't really go anywhere. Like, it doesn't like to go down. So awesome. NVIDIA, it is sort of been the darling of the stock market for the last 3 or 4 years. This has been just rocket fueled into, it's one of those high flyers, but it has earned its merits because they can't keep up with demand for their products. That is quite impressive. XOM, another oil, ExxonMobil. I don't particularly love trading oil stocks because they are so affected by geopolitics. And so when our politicians do something with, we're going to buy oil from here or we're not, or whatever, it just affects the stock price. So I don't really love those, but certain people do. Palantir has been on a real fly. This is a high flyer. The earnings and revenue are going up consistently. There is debate on whether the stock price is reflective of how much the company is worth. That's a different argument. And I'm not going to go into that. It's not something that tends to concern me too much. However, those stocks that are on high flyers. They can often experience more pullback when the market pulls back. What's interesting about Palantir at this point in time is that it did pull back. It was as high as 120, and now it's something like 85, 86 today. But that is still not affecting like its 3-month chart still up. Okay, so during this market pullback, it pulled back, but it didn't pull back to the point where if you had bought it 3 months ago, that would still be hurting you. So that's why it remains here. QQQ is an index. I just put that one on here because it is up, and I want to give people some idea about indexes. I myself do not actually trade any indexes, and I'm not actually invested in any of them. Crazy, huh? And then DPZ, this is Domino's Pizza. This caught my attention in the last year because Mr. Warren Buffett added this to his portfolio, and I was like, hey, I'll have a look. And it turns out he did his research. Imagine that. And it actually looks really great. And then we also have his Berkshire Hathaway stock below, which, I mean, if you're going to count, I can't count Warren Buffett out. And when I look at what he's able to do, I put him on the winners. JP Morgan Chase. Sort of like an industry dominator within our banking sector. It's interesting to look at banks because they don't have the earnings and revenue statements. So you kind of have to rely on the charts and other things when you're looking at their financials. But this one's looking very good as well. And then CrowdStrike. So CrowdStrike is doing, if you don't know what they do a lot of like keeping our computer systems safe with data protection and stuff like that. So they're an industry dominator there. There was a little bit of a skerfuffle where they kind of had this down day. where their software went down, and it kind of almost ruined the world that day, which was interesting, which just shows you how important they are. So it was a bad day for them, or in a bad week, but the stock recovered, and here we are. They're still here, and it just showed us how dependent we are on them. So that was a really interesting thing that happened last year. So again, we are at a market pullback, and what has just happened is that these stocks all still look good. So this is very interesting to me. I pay attention to this sort of stuff very carefully, very, very carefully. And I'm like, okay, the market is now telling me, and the institutions are now telling me which stocks they like right now. And to me, that's very powerful information. And so I take that very seriously, and I stay in these stocks. I am more interested in these stocks now than I was a month ago, because we've had this pullback and they've come out as winners, so I'm paying close attention to that. So maybes from that list. Okay, I'm going to break this out into known names and new names, and there is a reason for that. So the known names pull back less severely when there's a pullback, and the new names slam down harder. Okay, so if you're investing or if you are trading options, you just need to be aware of that. That is just sort of like a fact, okay? The one outlier right now that I would say I already called out, and it's still on the yes page, and that is Palantir. That almost surprised me that it held up so well, okay? But there are surprises sometimes. Nothing is written out in stone in the stock market, but we need to pay attention to what's happening. So HD is Home Depot, LOW Lowe's. These both have nice dividends, okay? And they're in just a sector of the economy where it's sort of like people are never really gonna be able to stop buying from these. These are the two industry dominators within that home repair space that they are in. And they also sell a lot to construction companies, and then also do a ton of work, especially Home Depot, around disaster cleanup when there's like a tornado or a hurricane or fires. The U.S. government actually goes to Home Depot and buys a lot of stuff from them, believe it or not. Okay, Texas Instruments. This is really interesting. This is an AI play. They are sort of like a lesser known AI person right now, okay, on the stock market. So that's interesting. Oh, I put low on here twice, guys. Sorry. Okay, Microsoft. Microsoft is an interesting one because normally that would be on the yeses, but it has just been stalled this year. Like last year even. Last year through this year, it's just flat. So this often happens in very awesome names, is that they were on a tear for like 5 years, and Microsoft was. It was one of the best. It was like the best stock on the market, other than waste management during COVID, after COVID, and what's the other one? Nvidia, some other ones had a tear, but Microsoft was phenomenal, okay? And so what's happened with Microsoft is that it's going through a consolidation period. So how long that lasts, I don't know. Maybe longer. So anyway, I'm not really entering new positions with Microsoft. That's my only take there. However, I'm not really selling my shares either, because there's no reason to. It's still a great company. Just great stocks oftentimes have to go through a consolidation period. Look at Costco's chart that's been just up for 5-6 years in a row now. And I go, oh, when is that consolidation coming? Because I just think it will. That's just my experience. Chipotle Mexican Grill, that was looking super awesome, especially after the split. So if you guys remember, that was a $3,000 stock. And then it split. And now it's super affordable at the price of about $45, $48. Bit of a pullback from an all-time high of, I want to say, like 63 since the split. So this one, I feel it's a maybe. The maybes are things that I would continue to watch. I just keep them on my watch list because they may be interesting for me to put back in the yeses once they clear those charts again. And so they can easily pop back down into the high, into the yeses, and then they could also pop down into the no's. So I keep a maybe list, okay? J&J. So this is all, you saw that was on my yes, and it's also on my maybe, okay? Because it's in a real fluctuation period right now. P&G, Procter & Gamble, This is like just one of those staple sort of brands. We all have P&G products in our home. It's really hard to not buy them unless you buy generics for your cleaning supplies and things like this. But I mean, it's like cleaning supplies, and it's like shaving cream and razor blades and just like all the daily goods that we use. P&G is heavily involved there with a lot of brands that you use on the regular. UAA and DAL, both airlines. I personally don't like the airlines myself. I just feel like they're too susceptible to pullbacks. Just dude, like COVID, it was terrible, right? But there's other things that happen there. If you historically look at their charts, there's like stuff that happens with airlines I don't like. So for me, it's like their earnings and revenue pass and their charts passed. It's just that to options trade them, they can have just down months at a period in time and then up months, and it's just susceptible to geopolitics and other things that I don't need coming into what I do with option. KO is Coca-Cola, nice dividend. This stock seems like it was on a stall a number of years ago, like 3 years ago, but it has since grown. It's kind of one of those more stable stocks. It doesn't tend to pay high premiums. It's sort of lower range in premiums as far as options go. And then Eli Lilly, LLY, pharmaceutical stock. They came out with the drug Mounjaro, which is the weight loss treatment drug. They grew tremendously because of that. And then stalled out because there was a shortage of how much they could make of the drug. So in the United States, the FDA allowed for compounding pharmacies to make these drugs generically, I guess you would say. The shortage is now over. As of tomorrow, March 19th, apparently Eli Lilly has enough of this drug to no longer allow for compounding. So this is a really interesting thing because we're going to talk about Hims in a second. But Hims was selling these drugs from their compounding pharmacies at a steep discount from what Eli Lilly was offering them. Eli Lilly has convinced the FDA they have enough of these drugs to sell to consumers, so they are yanking the compounding licenses away from these compounding pharmacies tomorrow on March 19th, and I see Eli Lilly being able to benefit from that. Okay, and sadly, all of these people are going to have to spend a whole lot more money to get their Mounjaro that are on their weight loss path. Okay, so new names that are maybes. Reddit, that is a really interesting stock. It is a new social media platform. It's not that new. It's been around, okay? But it's getting more traction because people are turning away from places like X because it's become a little bit toxic for various reasons. The age group in Facebook is sort of not appropriate. Instagram, you don't really talk about the things that they do on Reddit, and it's just become a place where you can talk about like problems or issues you're having or whatever in a very open forum, and people will share because everything's anonymous and there's like not as much nastiness there. It's sort of really interesting. I enjoy Reddit myself. Hood is Robinhood, the app for trading. Its charts and financials are looking really good. They are aggressively going after the retail trader to bring more people in. This went quite high recently and then had a major drawdown. So these stocks, look at them. They have major drawdowns when the stock market goes down. UAA, guys, I apologize. UAA is not supposed to be on here. That's supposed to be on the known names. But Hood, okay, so again, the reason I'm saying between known names and new names is the known names don't have as hard of a drawdown when the stock market pulls back. This is just what I always observe. Therefore, if you want your portfolio, or if I want my portfolio to have more of like a stable balance when I log in and I get freaked out by major drawdowns, I might be more attracted to the known names. The new names, they may fly, they may be high flyers for me on the up, but when the market comes down, they're fast sinkers as well. So I keep that in mind. So Reddit and Hood both have those sort of drawdowns. SoFi. Okay, so like everybody on X for some reason wants SoFi to be the next big company. The reason why these sort of like Hood and SoFi and Hims are so attractive, and even Palantir, is because they're cheap to buy. Like, people are really attracted to buying cheap stocks. And when I say cheap, like, the cost per share isn't very much. I don't think it was very long ago that Hood was like $19 a share. SoFi, I think it's been as high as like 16, but I remember when it was like 9. Today it's 11. Okay. So people that sort of come from, I don't know, like middle class backgrounds, and that is me, by the way, um, they tend to value getting things for less money. And they think that that is where the quality is that, hey, it's really awesome to be able to have 100 shares of something. But I'm just here to say it's not. You'd be better off buying Amazon for like, $220 a share than probably if you wanted your portfolio to really go somewhere that's a little bit more of a sure bet in the next 5 years than sort of like a SoFi. Because SoFi doesn't have any industry dominance. Their financials aren't nearly as impressive as Amazon's. I could go on and on. All right. But SoFi is going to be more susceptible to drawdowns, which is what we just saw. So, I mean, everyone was celebrating that it went up to $16 a share. And I'm like, hey, that's great. But look out for the way down. Okay. And then HIMS, that has been a high flyer as well. And it has recently had this drawdown. I'm very curious to see what happens with this drug going like offline, if they're going to find a solution for this. I'm very curious to see what's going to happen there. And then Ionic, this is a really interesting thing. This is it's a newer name. They're not making money yet as a company. They are in quantum computing, but quantum computing is like a new buzzword and like going to be the new thing most likely. When we were so interested in AI in the last couple years, the new buzzword and the new thing where you can see probably these big market flyers is probably going to be in quantum computing. So Ionic is one of the big players there. So that is on my maybe list of new names. It's the options chain on it is quite interesting. That's the other reason that I like it. Okay. And then losers. All right, let's just talk about the losers. Okay, coin or anything or master, anything that is crypto. Okay, so you're combining crypto within the stock market. So to me, it's like risk on top of risk. Like, what? I don't necessarily get it. For me, their financials aren't there. Their charts aren't there. And so I don't know, if you're like a crypto fan, why don't you just trade crypto? That's my take on that. Moderna, the mRNA, I mean, that was very big, a big flyer during COVID, but those days are kind of gone. And again, the pharmaceutical stocks, what ends up happening with them is they come out with a new drug or they announce that they're probably going to get FDA approval for a new drug, or there's speculation that they will. The stock flies, then they get it, and the opportunity's gone. It sinks right again. So I just think they're so difficult to trade and invest in. PayPal, this was like, 6 years ago, PayPal was an awesome stock, but there ended up becoming too many competitors within the PayPal space. Right now we've got Venmo, you guys know all the stuff that we've got, Cash App, all that kind of stuff. Like, PayPal is just not what it once was. And so we have to keep an eye on that. Like, we have to keep an eye on, as investors, when we have our long-term positions or we're trading options, that there's competition coming up. And so how do I keep track of that? Well, I go into my Yahoo Finance account. It's free. And I put all the tickers that are winners or maybes in my stock watch list. And then Yahoo Finance brings me articles every day about those stocks, and I read for 10 to 15 minutes a day. And that's what I do. If I'm overachieving that day, I might read for 20 minutes a day. But it is amazing how much knowledge about stocks that I have after doing this for 5 years. Okay? Like, you guys are hearing me spit out this stuff, right? Like, how do I know that? From your reading Yahoo Finance. That's it. That's all I do. It's as easy as that, okay? XYZ, that's Square. It is suffering from the same things that PayPal is. It was Square. It became XYZ because Jack Dorsey, the CEO, decided that he was going to change it from a payment processing stock into a Bitcoin thing as well. I'm like, Jack, what are you doing? I mean, it seemed like if you're a crypto maxi, all right, you're gonna think, oh yeah, that's awesome. Well, the investors did not like it. I was holding Square at the time, and I was like, wait, this is not the stock I bought. You're just changing things on me, Jack. Not cool. Okay, AbbVie again. That is going to be a pharmaceutical stock. I just feel like those are real tough. Airbnb seems like a great name, right? Seems like people are just doing more and more of this kind of traveling. But the thing is that the stock just isn't. It's not. It's not doing anything because of that. Chewy, this was a big one back in the day. During COVID, a lot of people were getting pets and the stock was soaring and they were doing really, really well. It's fallen out of favor. If you actually go and look at some of these stock charts, you will see a phenomenon, and it's something that you will see in pins, and it can tick you off as an investor. If you have been long on a position that has been a good position for a while, it will just annoy the heck out of you. And so we'll talk. I haven't looked at Chewy's charts to see if this is the case, but I have looked at pins. So pins has sort of like, not the best charts right now. However, their earnings and financials are great. And you're like, why aren't the charts good? That's not fair. It doesn't seem like it's fair. The reason they're not good is because the institutions would rather put their money elsewhere. That's it. That's all. The institutions are like, we'd rather own Amazon. So then, therefore, we're going to do that. Or we'd rather own Exxon. So we're doing that. And that's as simple as it is. So it's not to say that one day it can't rise again. Maybe I'll have it on my maybe list once, okay? I'm also pointing out there are some stocks that are highlighted in yellow. Nike, Estee Lauder, Disney, and Starbucks. These were all stocks that I traded and that were amazing at one point in time. And they all went from the maybe list because they started losing either their financials or they started losing their charts. And they made it all the way down to the loser list now. So, like, I owned all these stocks. On Nike, I had to cut my losses. On Starbucks, I think I had to cut some losses. Disney, I don't think I did too much there. It was just a long, and I sold it when it started losing. Estee Lauder, I made money on it, and I traded it a lot. I moved into some other things naturally, just out of preference, and then I never got caught in a loss on that one. But I'm just blown away by how great of a company it was and how great their financials were, and then just something sort of happened there. It's not that far off from being a winner again, but it's just not there yet. Dollar General, this was in the winner, in the maybe column, in the winner column. It fell out of favor. AMD, this stock was like an option, it sort of was an options trader's dream until the last like about 8 months. The chart keeps going down, and it's honestly, if you want to know why the charts keep going down on some of these stocks too, you have to, there's this horrible thing that happens with hedge funds. Well, they will find a stock to just absolutely beat up on. And back in the day, they used to do that to Tesla when it was trying to work its way up, and then they stopped. So that's interesting too. Tesla is the stock I love to hate. Just because I feel like there's a cult following around it. It's really silly. The numbers aren't there to warrant anything with Tesla. The charts are bad. The CEO is not at work. He's doing other things. And the falling stock price isn't getting him to come back to work, which is bonkers to me. I want my CEOs to actually show up and make the company better and like make me money holding that stock. That's just me. That's what I expect. And then the revenue is bad. Like they're shrinking as a company, and the CEO isn't doing much to create more mass appeal. That's just the case. Occidental Petroleum. This one's interesting because it was doing very well a while ago. Now it's not. Target. This is just something I put in here because it's so interesting, the comparison between Target and Walmart. And like, as far as where I would rather shop, I would far rather walk into a Target myself. And I do, but it just doesn't measure up to Walmart. So isn't that interesting? And then Foot Locker. So this was doing kind of well after COVID. Like a lot of people were wearing that athleisure and they were going to Foot Locker, and it was sort of like doing very well then, but it no longer is. So again, you have to kind of like check up on these things from time to time. If you were owning any of these stocks or you're options trading any of them and you're reading Yahoo Finance, there's things that could cue you in to these moving from category to category. The first thing would be is when they have their earnings, you should be reading about that. So you should know when your stock's earnings are, and you should know how they fared. And you should know what the reaction was to the earnings, whether it was a sell-off, it was a bump, it was a stay the same type of event. Okay? So this is it. This is my evaluation of those names at this point in time for spring 2025. There are some stocks that I didn't evaluate on here, namely they were O and RA, because those are simply stocks that are real estate stocks. So you buy those stocks primarily for the dividend, and they aren't necessarily, they can be for long-term holds to collect the dividend, but they're not necessarily for options trading because the premiums just aren't there. So anyway, I hope you guys enjoyed this. I will be back maybe in 6 months to do this again. And please comment in the comments if you see something that you think belongs on the winner list, because I would love to expand the winners list if you see anything there.